Alfredo Cancel. Let's go on to our first story this evening. And currency volatility in Ghana and overall exposure to currency devaluation have been identified among top industry concerns in Deloitte's survey of chief financial officers in West Africa. The Sub-Saharan Africa CFO survey offers a snapshot of the views, expectations and challenges of financial stewards as they negotiate global and local economic fluctuations.
The report said chief financial officers in West African countries are more positive about their growth prospects over the next few years, more than their counterparts in Southern African countries. It stated that terrorism and its impact on the economy is one of the top concerns for Nigerian CFOs. There were also concerns CFOs continue to spend more time in operator and steward roles than they do as catalysts or strategists. Ghanaian chief financial officers, on the other hand, are concerned about margin deterioration due to cost input pressures.
The CFOs in Ghana are particularly concerned about currency volatility. They're particularly concerned around skills. And they feel that the lack of skills in Ghana is inhibiting their competitiveness, and they're also concerned around regulatory certainty. They require greater regulatory certainty.
The advisory lead for Deloitte CFO survey, Michael Vincent, said investors still found Ghana and West Africa as an attractive destination despite known challenges.
And certainly there is a lot of interest in Ghana and Nigeria and West Africa generally as a destination for investment. And the kinds of things that investors are saying is that they see an attractive market in terms of the consumer market. They're seeing attractive growth rates over a sustained period of time. They're seeing increased transparency in terms of democratic institutions.
An investment analyst, Winston Nelson, has described the country's economy as unattractive to portfolio investors. According to him, figures from the Ghana Stock Exchange show a decline in volumes and values of shares traded over the period. His comments follow earlier remarks by President Mahama that Ghana remains an attractive investment destination for many investors.
To be fair to the President, he was talking about foreign direct investments. We can look at this in two ways. There are two types of foreign investors who would come into Ghana. You would have the portfolio investor who would typically will still sit in his country but send money down into Ghana to do some form of business for them. For a foreign direct investor, he comes here and puts a physical business in this space. I think what the President then was talking about was more about the second type, which is the foreign direct investor. If he takes time to look at the portfolio investor, the story is completely different. And how do we find how the foreign portfolio investors' attitude has changed? One, you can tell from data from the stock exchange, for example. So previously, where value and volume, let's say where value traded year on year was growing, for the last 3 years it's actually been falling. And we are in a market where about 80% of our trade is done by foreign portfolio investors. So if today you look at the same portfolio investor who was investing 3 years ago or 5-10 years ago, and you ask them that is Ghana still an attractive market for you, the answer is clearly no.
All right, so that's it for business.